Let's get into this market movement now. And stocks have plunged this morning with coronavirus panic selling hitting nearly every asset class before finding some kind of floor as hopes turn to a U.S. stimulus package. European and U.S. stocks futures particularly traded in positive territory earlier on, and some of Asia's deepest losses were recovered by the end of a session in which tight liquidity exaggerated moves. It was not clear if the late market moves themselves signaled a recovery in the dire sentiment that has wiped some $14 trillion from world stocks in a month and had Asian markets in free fall at the open. Japanese Nikkei fell 10% before managing to pare that drop to close out at around 6% at 17,442,000 there. The Hang Seng as well in Hong Kong fell off 2%, 23,796 points, while the Shanghai Composite was also a loser today, 1.2% down, 2,887 points. Over in the United States, while stocks cratered on Thursday in a stunning sell-off, the Dow Jones Industrial Average suffered its biggest one-day blow since the market crashed in 1987, that is, digging deeper into its first bear market in a decade. Blue chips tumbled to 2,352, or rather 2,352 points gone just yesterday for a massive 10% decline. The S&P 500 and Nasdaq posted sizable losses as well to join the Dow in bear market territory. That's when stocks, of course, are down more than 20% from their most recent record highs. But stocks are now closer to a 30% below the high set just last month. That's February the 19th to be exact. The selling was so fierce that trading curbs were set off, temporarily halting trading for the second time this week. There was a 10% fall for the Dow, as I said, S&P 500, 9.5% or so, while the Nasdaq Composite Index dipped 9.4%. Let's head on and move things over to Europe. Of course, things have continued to falter there. The ECB not seemingly giving enough to the markets then in terms of a stimulus package and not necessarily helping too much, but there is a sense of positivity perhaps filtering through as perhaps the market finds some sort of bottom for now. Whether that bottom is going to be sustained, I guess, heavily depends on the stimulus efforts moving forward and perhaps just what happens with the coronavirus and its spread across most of the European region as well. On the local index, well, it is our breaking news, of course, that we've now shifted to 24 confirmed cases of the coronavirus in South Africa. What that means, however, for the market, we'll certainly see a little bit later. For now, we're perhaps trying to find a rebound of sorts, even the likes of Sasol managing to gain so slightly, and we'll talk about that in just a minute or two. 60,000 back above that mark for the industrials, with financials unfortunately unable to tick any higher. Your commodity shares, well, those haven't necessarily taken in any positivity today. One would have thought, though, that because investors are shying away from the equity stocks, that perhaps the resources would see some positivity. Not to be for now, as the gold shares go down. Resources overall slightly up, but whether that is indeed where the floor was and perhaps now ticking higher is yet to be seen. As I said, that commodity picture looking slightly different. One would have thought then that the commodities and the resources would perhaps have seen gold go to 1,700. It's not to be. It's currently still sitting at 1,626. There for that gold price, platinum and oil both going down. A few more question marks being asked of that oil price as it continues to falter even today. A massive decline for the week, but as I said, we'll unpack that as well in just a moment. Onto the currency board then. South Africa's currency continuing to languish beyond 16 Rand against the US dollar. Just how far it goes as well is a big question. 20.41 for a pound, 18.08 for a euro. And on to the BRICS currencies as well. Sense of stability still when it comes to those BRICS currencies as well, which currently are there in that picture. Yes, some negativity, of course, as the market still persists with its bearish tone, but for now it is pretty stable. All right, let's turn our attention then to some stocks in these indices. This is a big one, of course. Sasol this week losing quite a substantial amount of its share price. Before trade today, 76% of that share price had been completely decimated and wiped away. Since May last year, 93 odd percent had effectively gone from around 470 Rand a share, sitting just around that 30 Rand a share for Sasol. That is a huge decimation. And this is that share price since the 11th of March. So earlier this week then, just look at that massive fall initially at around 5 o'clock, and obviously the opening of trade then as well on the 12th. And that fall continued on, as you see over here, to just yesterday's trade. Today we saw that picture come up ever so slightly in a hope then that we'd see the Sasol share price perhaps tick up around 40% gain there. But overall, only managing to rise just around 20% or so today. Not necessarily the biggest gain, trying to find some sustenance then from yesterday's close to where it currently sits today, and just after lunchtime at around 44 Rand a share there as well. And that is just the overall picture over the last few days. If you take a look at that yearly graph, if we move on to the next one, you'll begin to see just how consistent that fall has been. Though there are the highs over there, right through April 23 last year, in 2019, of course, then dipping right down to around 43 odd Rand a share. And that was around 470 Rand at the top of that mark. And it's been a consistent flow in negative territory. Of course, that's because of things like that Lake Charles project. The question I'll then ask my analysts as well today is whether perhaps they should consider selling that. I know they have said that Sasol then yesterday that they would consider increasing just how they dispose their assets and what assets to dispose in order to make more money. And they need, of course, another rights issue in order to try and find some funding. They do sit with around $2.5 billion in terms of cash. Whether that's enough in terms of liquidity, I suppose the market is trying to say that for now it isn't too bad. And all of this has really been because of this oil price, right? A massive, massive shift on the 9th of March, a big drop off then as Russia and Saudi Arabia got into that feud, and that unfortunately saw them dip off that oil price, dipping right through to around $31 a barrel. Very recently, just last week, it sat at around 53 US dollars rather a barrel, right at the top over there. And that was just the 2nd of March. So earlier this month already, we could see that this price was doing fairly well. If you shift your attention then as well to the next one, really just showing you the JSE's movement as well. Since around the 6th of March, this is how far things have gone. A big, nearly 15% drop off from that 52,000 mark, now sitting at around 44,000 points for the JSE. Also some massive losses there, really hurting the counter, as yesterday it fell 10%, that is. A big fall there, of course a fall that was rivaling that of 1997. All right. Let's have a chat then with Warwick Lucas then from Galileo Capital as we unpack this market picture and really talk about the week that was. Warwick, I can just imagine Monday comes about, you get into the office, and there's been an absolute rout. What goes through your head?
Right, yeah, it's well, time to recalibrate.
Yeah.
I think we had previously commented that we'd felt a bit concerned about this coronavirus, that we'd been a bit negative. Clearly not negative enough.
Yeah.
So, yeah, and then you double up, of course, with the unexpected news of this oil price feud, and I mean a massive crash in the oil price. Now, I mean, normally one would have said, oh, wow, that's like a great big tax cut to the world's consumers and should provide relief and so on. But it was such a massive fall that it actually starts raising credit market concerns, particularly in the US, where the fracking producers are relatively higher cost. So, of course, their debt starts becoming questionable, and it raises the issues of, well, you know, could there be further credit market crunches in the US? So, you know, moving forward then to what is that big bounce that we saw yesterday in the US after an initially horrid start. And that was the Fed saying, right, okay, we are going to aggressively push liquidity in to make sure that liquidity stays available in that short-term money market.
Yeah. Was it not just a great big panic, though? Was it not just panic selling and really just selling on the rumor and then hopefully trying to buy the fact a little later?
Well, I mean, often that's all it takes for credit markets to shut down. So, for example, if we went back to 2008 when Lehman's got itself into trouble, I mean, it was exactly the same scenario of, right, okay, who is going to be left holding the can now? So credit markets simultaneously shut down, and the way to break that is for the Fed to say, we will supply whatever liquidity is necessary and we will be the market's counterparty.
Yeah.
And because of the ability of a central bank to create and destroy liquidity on its balance sheet, they can actually do that.
Yeah. You think Russia and Saudi Arabia get back to the negotiating table?
If they've got any sense, yes. I think it's considered out there by some parties that this is a conspiracy to destroy American fracking producers.
Sure.
I don't think so.
Yeah.
Those fracking producers can actually come back online relatively quickly. If one goes bust, well, the leftovers get bought out by someone else with new money to throw, and they're off to the races again. So I think this is a genuine dispute between two parties who actually really have quite severe demands on their exchequers. I mean, Saudi Arabia has quite large social programs.
Yeah.
Russia, for its part, also has social programs, but it's a slightly higher cost producer. But they also, I think, have the political capacity to absorb pressure. So to me, this looks like a very poorly considered zero-sum game.
Yeah. One company that can't afford the pressure, though, Sasol.
Absolutely.
What a hard hit this week.
Yeah, no, that was absolutely brutal. I think part of the problem is its failed Lake Charles project.
Yeah.
Well, it's eventually come on, but after...
Should they sell that project just to survive?
Well, they should basically sell a few assets that will bring their cash flows or their balance sheet into some kind of better footing. Now, they've indicated that that's one of a number of options, also cutting capex. I mean, they quite clearly need to do something to restore trust in that balance sheet. I mean, they are looking a bit stretched, and that share price is currently, in terms of market capitalization, well below the debt, which is generally considered a red flag event. And although I think there's actually a lot of value in there and it may well be an opportunity, it's certainly, with markets shooting around like they are, it looks like a very hair-raising opportunity, to say the least.
Yeah. Recalibrating the stock and perhaps getting that rights issue going, you think that's going to be successful for them at least?
Well, I mean, the difficulty with announcing rights issues at times like this is can you get any participation?
Yeah.
And that's going to be an important issue. Well, can Sasol get that support and get the funds to the right place and restore trust? I mean, with a share price like that, they certainly would be suffering some fearful dilution.
Yeah. All right. It's going to get difficult for them. We'll see how things fare. Thank you so much for the time, though, Warwick. Really appreciate it on this Friday.